Hello everyone, my name is Aina Cahya Putri. I'm a student at Indonesian Persada University. In this presentation, we will discuss about accounting. Before starting the presentation, I would like to thank my lecturer, Mr. Budiantoro, who has given the theme of this presentation. In general terms, what is the purpose of accounting? The purpose of accounting in general is to provide information on finances, whether it's the assets or the company specific. Provides information on changes to company economic sources need to. Provides company financial information that can help in estimating its potential profit. Who uses the data which is provided by accounting records? Accounting records and reports provide data that are used by management, stockholders, creditors, independent analysts, banks, and government. The management needs accounting information to determine if the organization works toward its goals. What are the two types of records that are prepared by most business? The income statement and balance sheet are the two types of records that most business prepare regularly. Income statements and balance sheets can help manage finances in a company. We can find out how money is received and spent by company. Having an income statement and a balance sheet would also make the company's financial management process easier. What can one learn by analyzing the income statements and balance sheet of a company? By analyzing these records, one can determine whether or not the activities of the company have been good for it, and to see what improvement measures need to be made in the future relative to the current financial position of the company. What is ratio analysis used for? A monetary ratio analysis is used as a measure of the finances of a particular company. The way it is done is by comparing two variables drawn from the company's financial statements and is placed in the balance sheet or profit and loss of existing company statements. What are three categories of ratios in finance? First is profitability ratios. This ratio is useful to measure the company's level of ability to make a profit based on sales value, assets, and capital. And second is liquidity ratio. This ratio is useful to measure how well your company can meet short-term obligations. This analysis is based on relative smooth activities of the obligation, excessive debt. And last is investment ratio. The ratio that measures the company's ability to give deep funds, especially for investors in the stock market on a given period of time. That's all my presentation. Sorry for my grammar. Thank you and see you later.